SuperTrend Confluence Signals by AlgoAlpha. It's a tool you can use to see trend direction, gauge how much real muscle is behind that move, and time entries around volatility-adjusted pullbacks, all on one chart. We're going to go over what this indicator is and how you can use it in your trading. If you happen to find value in this video, remember to leave a like. Let's get into it. Now, to get started with this indicator, you first of all want to go to TradingView, the trading platform that I'm going to be using. If you need to sign up, there's a link in the video description for you to do that. Next, you want to load the market and time frame you trade. Click on Indicators and type in SuperTrend Confluence Signals. It's going to be this one by AlgoAlpha. Add it to your chart and you'll immediately see the SuperTrend bands, a gradient volume histogram hugging those bands, a few smart labels and arrows, and a compact multi-asset trend table. Ladies and gentlemen, this is the all-powerful SuperTrend Confluence Signals by AlgoAlpha. In short, it enhances the classic ATR-based SuperTrend with a relative volume histogram for conviction, retracement arrows for timing, automatic structure and mitigation levels for context, and a 5-symbol, 5-time-frame trend table for macro to micro alignment, all designed to help you stack confluence instead of relying on a single signal. And let's break down what you're looking at, starting with the foundation. The core SuperTrend reads trend using ATR, flipping bullish when price holds above its band and bearish when price holds below it. It's simple, it's visual, and it adapts to volatility via two controls: the ATR length and the multiplier. Shorter ATR and smaller multipliers make it more sensitive for fast charts. Longer ATR and bigger multipliers smooth out noise for swing trading. Next, the volumetric histogram. These gradient-filled bars sit right on the price pane and anchor to the SuperTrend, scaling by relative volume so you can literally see when activity is bursting versus when a move is running on fumes. When price pushes with muted histogram intensity, that's a quick, careful flag. When the push aligns with strong histogram bars and sometimes a diamond volume TP marker on the candle, that's your liquidity context right where you need it, on price. Then we have the retracement arrows. These pop when price pulls back toward the SuperTrend, respects it, and turns, basically highlighting those high probability continuation zones where the trend just took a breath. Instead of guessing which dip to buy or which pop to fade, you've got a quantified nudge that the pullback held the band and the prevailing direction is still in charge. The volume TP markers are small diamond tags printed on the exact bar where a genuine liquidity burst occurs. They're not buy or sell signals, they're context that shows when participation spikes. Use them to add conviction when a SuperTrend flip or retracement arrow appears alongside a diamond, and to manage exits when a strong run looks climactic. They highlight high-volume events that contextualize price moves with liquidity bursts. Now, the automatic structure levels are where this gets really tactical. The script draws clean horizontal levels at meaningful transitions and lets you define how they're validated or invalidated. If you choose body, price needs a full candle close through the level to kill it. If you choose wick, a single wick breach is enough, faster but riskier. You can also control expiry and rejection behavior so levels don't linger forever if they're no longer relevant. That means you're defining structure with rules up front, not redrawing lines after the fact. And finally, that multi-asset trend table. Pick 5 symbols that matter to your trade, pick 5 time frames, and you get a compact dashboard of up-down bias at a glance. It's perfect for avoiding tunnel vision. If your 15-minute setup looks great, but the table shows your benchmark rolling over on higher time frames, that's a heads up you might be swimming against the tide. Let's jump into the settings real quick so you can tune it to your style. ATR length sets how reactive the SuperTrend is to volatility. For me, I changed this to 34 to smooth out noise on my charts. The multiplier scales the ATR band distance, so flips happen sooner or later depending on your preference. I'm leaving this at the default for now. Volume scale controls how punchy the volumetric histogram looks relative to recent activity, and volume TP sets how intense a burst needs to be before a diamond prints on the candle. Retracement sensitivity governs how strict the pullback detection is around the band. I changed this to 1 because I want cleaner continuation arrows. Max level age defines how long automatically drawn levels stay alive before expiring. I changed this to 200 so useful zones don't time out too fast. Sweep type decides what invalidates a level. Body needs a full close through the line, while wick reacts to a single poke. So I'm sticking with body here. Allow rejection lets the script confirm a level when price tags it and immediately bounces. I enabled this because I want that extra confirmation behavior. Enable zigzag simply overlays a zigzag helper on structure. I disabled this to keep the chart clean. Down in multi-asset table, you can assign 5 symbols and 5 timeframes. I changed asset 1 to OANDA, AUDNZD, and left the timeframes as they are because we're running a 2 timeframe alignment strategy. If you're using a different base timeframe and want to replicate this, just look one step higher than your trading chart. So 5 minutes checks 15, 15 checks 60, and 4 hours checks 1 day. And make sure the trend bias agrees across both before you pull the trigger. Show table toggles the matrix on or off. Table size and table position lets you tuck it away nicely. Bull and bear color adjust the band and fills. And inputs and status line just keeps your key numbers visible at the top so you're never guessing.
Now a lightning pass through the Style tab and I'll keep it super tight. Uptrend and downtrend toggle the green and red SuperTrend visuals so you can show or hide the bands. Bullish retracements and bearish retracements control whether the continuation arrows print when a pullback respects the band. High volume uptrend and high volume downtrend place the diamond markers above or below the bar when a relative volume burst hits. Line fills, lines, and tables control the visual extras for bands and the matrix. For me, I unchecked lines to keep the screen minimal. Precision sets the number format, and labels on price scale plus values in status line just make the readout cleaner and easier to glance at. After all that, click OK, and let's get into how we actually trade this beast with the 2 timeframe alignment we just set up. In this video, I've got 3 strategies for you. Let's kick off with strategy number 1, trading the retracement. You remember those retracement markers? We're going to use them together with the trends so we're not guessing. We're stacking signals that actually make sense together. First step, lock in a bullish backdrop. I want the SuperTrend band green, tilted up, and price living above it. That tells me the path of least resistance is higher. Quick reminder why this works. SuperTrend is ATR-based, so the band adjusts to volatility and flips when price meaningfully pushes and holds on the other side. Uptrends show as green, downtrends as red. We're not relying on a rigid line. It's adapting to the market's wiggle room in real time. Now we wait for a real pullback, not a tiny wiggle, back toward the band. To confirm it's a quality dip, I want the retracement arrow printed. That's the tool saying price tested the band and respected it, which is exactly what you want before a continuation. No arrow? I'm patient. I let the chart set it up properly instead of forcing an entry in the middle of noise. During that pullback, I also want participation. That's where the volume TP markers, the little diamonds, and the volumetric histogram come in. Ideally, a diamond lands on the retracement candle or a couple bars before or after it. The closer the alignment, the better. Then I glance at the volume histogram hugging the band and make sure that bar is clearly taller than recent bars. That combo tells me buyers actually stepped in, not just a sleepy bounce with no fuel. In short, the diamonds flag the liquidity burst and the histogram shows the intensity right on price. If that retracement candle is weak, I don't chase it. I'll let the market play forward and take the entry on a clean bullish engulfing candle, still respecting the band. One more check before I click buy. Higher timeframe alignment on the trend table. Since I set asset 1 to the same market I'm trading, I just look one step up from my execution timeframe. On the 1 hour, I check the 240-minute sell, and I want it green with an up arrow. Same logic if you trade different bases. 5 min checks 15 min, 15 min checks 1H, 4H checks 1D. We want both clocks pointing up. When all that lines up, green SuperTrend with price above it, a proper retracement arrow, a nearby volume TP diamond with a strong histogram bar, plus higher timeframe agreement, I'm in. I'll park this stop a touch under the SuperTrend band so a routine wiggle doesn't kick me out, and I'll set the take profit at about 1.5 times the risk. Then I let it run and let the confluence do the heavy lifting. All right, let's roll into strategy number 2. It's still retracement based, but the way we define the pullback is a little different. First, I want the higher time frame, the 240-minute sell on the trend table, to be bearish. If that box is red with a down arrow, we've got the backdrop we need. Now, zoom into the 1 hour and make sure the SuperTrend band is also bearish, red and actually holding below price. Here's the key twist. For the pullback, I want the 1 hour SuperTrend to flip green briefly. Could be 5 candles, could be 30, then flip right back to red. That's not a full trend change, that's your retracement in disguise. When the band flips back to red, that's the moment we start hunting entries. As it flips back to red, I want participation to show up. That means a volume TP marker, the little diamond, printing on the flip candle or within a few bars after. If it doesn't land perfectly, I'll give it 3 to 5 candles to appear. The closer it is to the flip, the better. And if you want to double check with your own eyes, glance at the volumetric histogram hugging the super trend. When that bar is clearly taller than recent bars, you know the push isn't running on fumes. With the flip back plus a nearby diamond, I'm in short. My stop goes just above the super trend band or above the most recent swing high if that's cleaner, and my take profit target's about 1.5 times the risk. Simple, rules-based, and you're not guessing. You're stacking trend, timing, and volume confluence. Now, strategy number 3 is all about breaks and retests of structure, the automatic levels this indicator draws for you. Think of them as clean support and resistance zones managed by rules, not by eyeballing lines after the fact. For a long example, I want both the 1 hour and the 4 hour to be bullish, green super trend on the 1 hour and the 240-minute sell on the trend table green as well. Identify a resistance level from the auto-drawn structure levels. Box it with your rectangle tool and extend it to the right. Let price break above it and push a bit, ideally leaving a small gap where candles don't immediately touch the zone. Then I wait for price to come back and retest that level, either a wick tag that rejects cleanly, or at most, a brief close inside followed by a strong close back above on the next candle. No decisive close back below the level. If that happens, the retest isn't valid. For confirmation, I love seeing a bullish engulfing candle complete the retest. If a volume TP diamond lands on or near that retest sequence, even better. That's the who behind the move. Then I take the long, park the stop under the most recent swing low or just beneath the super trend band, and I'll target around 1 to 1.5 R depending on how much room there is to the next structure. And the trade was profitable. In summary, SuperTrend Confluence Signals turns a classic trend tool into a full decision framework. It maps direction with ATR, grades strength with relative volume, times entries with retracement cues, auto-manages structure so you're trading the map, not your emotions, and keeps you aware of the bigger picture with a mini trend dashboard. If you've ever felt overwhelmed switching between 10 indicators and 5 tabs, this compresses the workflow into one clean view and pushes you to trade with alignment, not hope. This is not financial advice. This video is for educational purposes only. The strategy examples here are built from indicators. Make sure you add your own price action or fundamental analysis before risking real money. If you found value in this video, remember to leave a like, or even better, consider subscribing to stay tuned. Thanks for watching. See you next time.